City fringe property. Is it property investment gold or is it fool's gold? It's an interesting question because often in terms of property investment research, we measure the performance of a suburb by its median price point. And this is an important message for people who are buying hot property reports or new hotspots reports and those types of things, because the data doesn't tell 100% true story. So let me unpack that for you. What we're talking about here is looking at existing property in a location that's potentially getting some subdivision in the greenfield area behind that. So if we look at what median price means, it means the middle value in a group of values. So we might have properties worth 480,000, 490,000, 500,000, 510 and 520,000 that have been sold in that time period. And usually as a minimum time period, I'm looking at a quarterly time period. So in that particular example, 500,000 is the median value. Now that might be the median value of the existing stock in that area. But what happens when the new stock starts to be built and starts arriving? I'm going to show you on Google Earth what actually happens to these areas. Let's take a look now. So here we are on the incredible Google Earth. This is a fantastic tool for which to do your research. And you can see up here, I've introduced a timeline bar, okay? Now this is going back to 2003. If I was to fast track it to today, here's what it looks like today. So you can see enormous amount of property growth in terms of subdivisions coming into what was a city fringe area back here. So you can see those changes taking place. So the question is, with all of those changes, have they moved the property values of all the existing properties in those areas up? Now you can see some further subdivision going in the neighbouring suburb as well. So there's been a lot of development out there, but does that constitute the actual improvement on the existing stock in that area? Because if it doesn't, then effectively these reports are going to be misleading around median price gain. So let's go and have a look at our location analyzer software. So here at Empower Wealth, we've got the cutting edge technologies that allows us to do further insights. So what I've done here is I've done a search on Redbank Plains and I've looked at the growth report. We've got growth, historical, market activity, etc. So I can look at quite a lot of interesting information. And we can see a few things. Here's the historical sales volumes that have occurred through that time. So very flat and soft housing growth in terms of what's happening around the price growth. And that's the value of growth over time. So we can see here through this 2003 period, we had some strong growth coming through here. Now, again, back in Google Earth, we can see that back in 2003, we aren't able to go back further than that, but we can see some evidence of subdivisions starting to come in here. Some newer stock as opposed to the older subdivisions. And you can usually tell these newer subdivisions by the way they lay out their construction. So you can see as we move through, you can see more and more construction coming around that sort of 2008, 2007, 2008 period. So there's that change that's occurred through here. A lot more construction through these parts. So we're seeing that construction occur, and then we can see what happens to the price point. So again, we can see further growth in terms of the price point moving through that whole subdivision period. So those commentators who might be claiming fantastic growth for that suburb may not necessarily be the case, because all that's happened is new properties have come online and they're probably selling at a higher median. And if those properties that are being sold represent the new median, because they're all new properties, effectively you're going to get an artificial capital gain target based on median value. So it's really important when you're studying this information to get the facts around what actually makes up that data. And obviously as we fast forward into the current situation, we've got more development going on in the neighbouring area, which potentially could feel like the area is growing in value, but in fact it may not be the case. So in that example that I just showed you, it's important to understand what actually inflated the median was that there were more newer properties being sold at a higher price point. So in reality, we didn't see those older property prices skyrocket. All we saw is the reporting that we do in terms of median house price changing significantly during that time period. So again, don't get seduced by the data if the data's not telling the true story and comparing apples with apples. So remember, when you're buying in a fringe area of a city, are you buying real gold or are you buying fool's gold?